Street Science going global. That's what we like to do. And today, a big deal for IBM and an even bigger endorsement for investing in Africa. The tech giant is actually saying it's going to be supplying technology for an upgraded cell phone network across the 16 nations of sub-Saharan Africa. Now, IBM isn't disclosing the size of the deal. Analysts say it could be $1.5 billion over the next 10 years. IBM's been in Africa for 5 decades, but in the past 5 years alone, they've already invested $300 million in the region. And the CEO, Sam Palmisano, says Africa is the next big emerging market. He notes only 23% of Africans have access to banking services, but already 8 million of them use their cell phones for payments. And it's not just IBM. You've got U.S. giants like Cisco and Freeport-McMoRan betting billions on Africa, and they're competing with massive amounts of cash from places like China and India. Africa sits on the world's biggest stash of natural resources, many of which are trading at all-time highs. It's clear Africa's full of opportunity. The question is that opportunity, does it make sense for regular investors, for the little guy? It's Africa Day here at the Big Board, and joining us now, Corey Modeste. He is a director with Greylock Capital, and Ashley Bendel, Exotics USA Associate Director. Good to have both of you with us. And you've been tasked with this assignment for this segment of trying to explain why Africa makes sense for regular retail investors. Yep. Corey, what's the rationale?
Well, I think what you really got to look at is about 3 or 4 kind of big picture factors. First, reform politically, reform of domestic capital markets, reform of the banking sector. And these are all going to be the things that are going to allow these countries to grow and develop really in the same way that other emerging market countries like Brazil, Russia, and India have developed.
And does it make sense, Ashley, for the regular person? You look at a lot. There's a few exchanges, for example, in Africa that tend to dominate. One of them is Nigeria, and a lot of Americans hear Nigeria and they think, it's corrupt, it's scary.
Sure. Well, Erin, like you, I've been down to Nigeria. I take my clients there twice a year, and I see what it's really like. The economy is thriving. The oil, one of the top 10 producers in the world. There's 150 million people. As you say, it is underbanked, and there's a tremendous amount of potential to invest there as a result of that.
It's amazing. You know, I'm just throwing this out there, but we met an entrepreneur in Nigeria, and he's providing portable toilets. I mean, there's all kinds of technology there that you could make money. But I mean, portable toilets, there wasn't a market for that. The guy's becoming a millionaire on portable toilets. There's so much opportunity, I guess, no matter where you look.
There's also, I mean, with 7% growth, the middle class is coming through. It's your typical emerging market opportunity, yet far less underpenetrated than the larger brick markets.
All right, so how do you play it, Corey? I know you've taken some time to look at different countries and specific companies. Which ones?
Well, I think what you really got to look at is, like you said, you know, some of the key producers of copper, for example, cocoa, bauxite, which goes into aluminum. So everything that's really going to be fueling domestic growth in countries like China or like the U.S., a lot of those raw materials come from Africa. So you can really look at the basic names. So, for example, metals and mining. You know, you look at manganese, which comes from South Africa. You look at gold. Ghana is the second largest producer right after South Africa. So it's going to be a lot of the familiar names, Mittal, BHP, Vale, for example. These are all companies that have been going in, for example, at 2008 when prices of these metals were at an all-time low. So they're really going to see a lot of the returns coming over the next 2 to 3 years.
And what about in banking, which I know you mentioned and Sam Palmisano mentioned as an opportunity?
Well, this actually ties into something Ashley said, which in terms of Nigeria and a lot of the opportunities that you see there, one of the things that a lot of these countries have been doing is reforming their banking sectors. So, for example, you had, let's say probably 5 years ago in Nigeria, a very fragmented banking sector, probably 117 banks. Right now, there are about 24. And what the central bank has done is really improve the environment by raising capital requirements so you have fewer but stronger banks. So a lot of the banks, for example, that you might find there, First Bank, for example, you find some of the South African names, such as Standard Chartered going in there, Standard Bank, for example. These are all strong names that are under-levered, that didn't, for example, suffer from the housing market decline or like subprime crisis you saw in the U.S.
And so Corey makes the case for there are specific names. You can buy them, some trading on big exchanges, Nigeria, South Africa, and global names too. For people who don't want to go in stock specific, maybe a little bit too nervous, is there another way to do it?
Absolutely. For the retail investor, there are a small handful of ETFs which have daily liquidity and are investable. Here in the US, for US investors, there are also a handful of retail and institutional funds with expertise in Pan-Africa.
And we threw up the Van Eck ETF, but I mean, there are ETFs now. It used to be when you bought an Africa ETF, you got the Middle East lumped in there too, and that tended to dominate. Is that still true?
The majority of ETFs looking at this region are African, Middle Eastern, North African. As you mentioned, there are some now looking at just this Pan-African opportunity, i.e. Sub-Saharan Africa and North Africa. And you
can get that way too. All right, well, thanks so much. Appreciate both of you taking the time. I know you got to get back to your panels for Africa Day. Thanks again.
Thanks very much.